Okay, well, good afternoon, everyone, and thanks for joining today's session. Today, we're going to focus in on a particular topic, land, and particularly apartment land. And we're going to do a pretty deep drill on maybe what's happening in the North American marketplace, and then if there are any opportunities to buy land, how do you buy land in a difficult market? It's Derek Lobo here from Rock Advisors, and we're in the business of brokerage, but we think part of brokerage is education of our clients, and we always look for gap in the market topics to talk about. And we'll run, a number of seminars throughout the year, and we've got it scheduled for next year already. So here's what we've got coming up. December 3rd at Toronto Real Estate Forum is our full one-day conference. There'll be, 200, 300, 400 people attending the session on apartment development and affordable housing. We're going to have about 30 speakers there. And it's the annual event that we've been running for. I think this is Rod. I think our 15th year. So we hope to see you there. Then in the new year, we every year we do, in about the first week of January, the apartment download for 2025. And also, all of you are going to make New Year's resolutions about exercising and eating better and things like that. And we're going to just before that session for 1 hour run sort of a longevity program and sort of an event on for CRE professionals on health. We just think it's a good time for us to sort of check in on that very important topic of our longevity. Thursday, January 9th, and we do a lot of work with intergenerational families. We're noticing now as companies are moving from, there's challenges moving from Gen 1 to Gen 2 for sure, but there are significant challenges moving from Gen 2 to Gen 3. And how are people doing that? How are companies transitioning? And what happens when the children don't want to work in the business, when some want to work in the business? And we just spent a lot of time in this space, and we think that it's an important topic to talk about. So that's what we've got coming up. But the big event is December 3rd. Now, we spend all our time in the apartment space, but as time has gone on, Rod and I, and with a lot of help from Daryl, have realized that we've got a real housing problem, and we can't build apartments fast enough to solve this problem. So we were looking for really a creative way to do it. And we're going to take just 2 minutes to show you a project we're working on that certainly involves land development, but I just want you to see what we're talking about here in terms of what we call the self-funding house. And the self-funding house answers the question that maybe a father would ask or a mother would ask is, how will my children ever afford a home? Okay, we'll be back in about a minute and 30 seconds. Rod, you'll play that?
The self-funding house is a complete system aimed at bringing affordability of ownership and rentals to the market with 6 programs, each targeting a different component of the housing industry. The self-funding house has created a program for homebuyers to afford a house with an annual household income as low as $57,000. We provide homeowners access to resources and guidance from industry experts, empowering them to afford a house by treating their home as a business. Home builders can increase sales by accessing the largest buying group in Canada. The Self-Funding House Developer Program has completed the pilot project, which has resulted in proven processes and sales results. We are now implementing this system with other qualified home builders. Municipalities can now tackle affordability of home ownership and affordability of rent simultaneously with the Self-Funding House Municipality Program. With our help, learn how to create a program that attracts affordable solutions to your municipality. Our financial program brings the ability to create affordability of ownership by enabling the rental income of an accessory dwelling unit to count towards mortgage qualification. This means a whole new cohort of homebuyers are entering the market. The Self-Funding House Property Management Program makes it easy for homeowners to choose from being in total control or outsource the management of their unit. Learn the ins and outs of becoming a landlord, or easily build a team to ensure your business is handled in a professional and reputable manner. Finally, a new construction solution that makes sense for investors. The Self-Funding House Investors Program provides an opportunity for investors to benefit from in-demand products, increased liquidity, and fewer complications, all while reducing risk. Whether you're a buyer, builder, municipality, or investor, the Self-Funding House is bringing affordability to the market quickly, and you can be a part of it. It's a win for all.
Okay, thanks very much, Rod, for playing that. Ashley, a little bit later on when we talk about build for rent, we like the idea of sort of combining the two, you know what I mean? But we'll get to that. If there are any questions, we're going to go for the full hour and stop right at 2 o'clock. But if you have questions, please put them in the chat room down below and we will try and answer them. Rod, next slide. We're going to record this webinar as we always do, and we'll send the people on this on this recording, the webinar, it's live for about 2 months. You can also find it on our landing page. Okay, slide. So the agenda today. Look, we're going to talk about land. We want to talk about real estate cycles. We've got Ashley Bloom here from Florida, and so we're talking about Canada and the U.S. a little bit, but we need to just define the problem. Like, do we have a problem with land? We want to talk about a couple of markets, and then the bulk of it's going to go in section number 5, where we talk about creative solutions for landowners, financiers, buyers, and developers. Okay, all right. So here's our speakers. We have Ashley Bloom from Florida. Ashley's a land expert, with SVN. Daryl McCullough, longtime friend, advisor, and an expert in structuring deals, and Harvey Russell, who is the prominent land broker in Calgary and has a really good handle on everything that's going on in the marketplace. Now, let's go on to the first thing. We want to talk about the real estate cycle, okay? And if you've been in the real estate business for a while, then you know this cycle. But just because Ontario is in one place doesn't mean Alberta's in the same place or Florida's in the same place, right? So this is this typical real estate cycle that people go through, okay? And for us that are in Ontario, Daryl and I are here. We feel that we are, Daryl, would you say approaching the bottom of the market, at the bottom, or we're definitely not at the peak and sort of the glory days that we had before? Daryl, just any comment on the cycle here and where we are?
You're asking me, Derek, about the cycle?
Yes.
Yeah, well,
Yeah.
one thing is my travels has proven to me that where we are in Ontario, Canada is not where everybody is. And it's important to isolate where you are because we are in different variations of this real estate cycle that's shown here. So it's a very important thing to consider. It's not a macro position in North America. It's clearly isolated into regions about what's going on. So that's my major thing because I see a lot of differences in North America.
Yeah, and it's actually surprised me as to the differences in the continent. Ashley, where would you say Florida is in this real estate cycle?
Florida is probably still optimistic and still hot. Certain segments are slower than others, i.e.
Right.
market rate apartments. But as I think we'll get into later, there's different asset classes, and I think you mentioned build for rent, that are sort of filling some gaps to keep the market chugging along.
Right, but you said it. So we're multifamily guys, right? So you said maybe except for multifamily. What do you mean by that, Ashley? Because multifamily is the darling of the industry right now. Yeah.
Yeah, I mean, the financing towards the end of 2022, when the interest rates started to skyrocket here in Florida, we have sort of a three-headed monster. You had interest rates, inflation, and you had insurance. Obviously, we have a hurricane that's the eye is about 100 miles west of me right now. But that has sort of made the underwriting not work for the traditional market rate apartments. However, townhouses, build for rent, affordable housing. There's been a lot of funding in Florida for affordable housing through some of the hurricane relief that's come through others. So that has allowed land and multifamily to continue to be hot while market rate projects are sort of stuck with the capital market constraints.
Right, right. So, I just want to stay on multifamily in Florida for a minute. Assume the building's already built and it's already stabilized, right? What we've seen in the markets that I've worked in is that the greatest danger to apartments is not recession, because once they're full, it's overbuilding. Would you say any parts of Florida are overbuilt with rental apartments?
No, the data and the developers I talk to, it's not overbuilt. It's, can they achieve the rent growth that they've underwritten? I think we're starting to see some topping off of the rent growth. And so, but, over the last 2 years, we've had very few projects permitted compared to previous years. So that's kept the supply from being oversaturated in most markets in Florida.
Okay. All right, great. Okay. So let's go on to the next slide. I want to just take a bit of a North American view to things. Okay. So we're sitting up here in sort of central Canada and Toronto, right? and the marketplace isn't particularly good. And some of our clients wanted to get diversity and get money outside of Canada. Fair enough. And they were apartment people and they understood apartments. So this is our thesis. It involves land and it involves apartment development. So we're sitting up here looking down at about 50 states, right? How do you decide where to go? It's just too big. And when we looked at Canada, you can see in the insert there, we have the province of Alberta colored in red. We think Alberta is like a Republican state. Okay. Most of Canada, we think we blue, and it's like it's Democratic states. The problem with Alberta was we just couldn't find programmatic developers building widgets, building cookie cutters. Fair enough. And the returns are lower in Canada for a number of reasons we won't go into. So when we looked at the United States, we looked at the entire country, all 50 states. It was just too much to look at. So we took an axe to it and said, let's just lop off the blue states. Let's lop off the Democrat states. Okay. There's more governance, there's more meddling, more environmental, more everything, right? And so maybe we lost some good states there, but we eliminated them. So that left us with the red states on the map, right? And then we broke those red states into 3 categories. I would call sort of Montana, North Dakota, Wyoming, Idaho. Like those are all great places, okay? But there's not enough people there, right? So I would call those, so we eliminated those sparsely populated states. Remember, what I'm trying to do is eliminate states to look for places to invest in, okay? And then we said, so then everybody in Canada and a lot of people in the US are enamored with the Sunbelt states or the smile states, right? North Carolina, South Carolina, Florida. Actually, people are pouring into Florida. Money's pouring into Florida, right? Texas, and so on, right? And so what we said is, look, as Canadian guys coming from the outside, how do we outsmart the smartest guys in the US by competing with them in Florida and Texas, right? And what we recognized from talking to people and looking at data was that the returns from Florida and Texas can be high and they can be low, meaning that they're lumpy. Make sense? But when you're a foreign investor, what you're interested in is security and steadiness, right? So I would say that the attractiveness or the sexiness of Florida and Texas is actually also a disadvantage because you get your timing wrong. You can lose money, but you get your timing right, you make a lot more money. So by eliminating the states with very few people, and by eliminating the Sunbelt states, what does that leave us with? The Midwest, Ashley, the Midwest, Harvey, Daryl, right? These are bread and butter states. Not exciting, but they're real. Fair enough. So we zeroed in on the Midwest around Kentucky and Indiana, right? Mike Pence was the governor of Indiana. They've had a balanced budget forever. And you know, when you think about North America, the culture runs north-south. It doesn't run east-west. And for us, living here in the middle of central Canada, we feel very comfortable with the culture through the Midwest United States. And as the reindustrialization of America is occurring, the airports, the rivers, the trains, the highways, they're all there. And we're seeing good growth in those states, but not the booming growth of Florida and Texas, but not the boom bust either. And so actually that's what we've actually decided to spend our time and our money investing in garden apartments, in the United States. Okay, so just as an aside, that's part of how we're looking at America, right? I don't view it as one country. It may not be 50 individual states, but it's certainly regions, and there are significant regional differences, both politically, economically, climatically, and so on. All right, so let's go to the next slide. We want to talk about land today.
Derek, can I ask a question, Derek?
Yes, of course.
Derek, why don't you ask Ashley to respond to what you just said? That would be interesting how he thinks that you're thinking.
Ashley, it'd be really fun to hear your thoughts as long as you agree with me. Yeah.
Well, actually, as part of my role at SVN, I do serve as the National Land and Development Product Council Chairman, so I do deal with our advisors across the country. And Derek, as you were giving sort of your intro, I think you're right in the idea that Florida and Texas can be more competitive and subject to more ups and downs as you go through cycles. So, I would say the Midwest, look at your data, look at your demographics, look at your supply would be probably a more consistent and steady return, as you just said. So I would tend to agree with that. And in today's world with tools and technology, measuring that data is a lot easier than it used to be.
It really is. And you know, when you go to the United States, the amount of data that's available is extraordinary. We do not have the services you have there, right? To make good decisions based on data as opposed to just sort of a gut feel basis. Okay, Harvey, you're gonna come off mute. First question is for you, baby. Okay. Well, actually, one question for you before to Calgary. What do you see as the biggest obstacle in the permitting and selling of land today? And then Daryl and Harvey both comment on that.
Yeah, so the biggest obstacle, you know, of the permitting and selling land is obviously the time that it can take. It's also costly, but you know, when you're dealing with a contract allows even for time to do the permitting, you're dealing with many instances, government agencies that's outside of the control of the buyer. And so, you know, and when the government agencies are short-staffed, it can elongate the time you need, even if the buyer's doing everything it's supposed to. For instance, in Florida, in February, there was a court decision that overturned the state of Florida's ability to permit wetlands within the state on certain instances. And so that has now created a restarting of that process, which has been problematic in transactions. But it is also now further logjammed the Army Corps of Engineers, which is now the entity that had to take on. So, you know, the biggest obstacle is the time it takes to navigate through those processes.
And that's in a red state.
Correct.
Right.
If we have an election, yeah, depending which way the election goes, that may flip right back, but that's a whole different story for a different day.
Sure. Daryl, do we have like a land problem right now?
Do I have a land problem, or do I know?
Do we have a land problem right now?
We're in the cycle, and we're looking at, you know, I think the land problem comes down to an individual looking in the mirror if I have a land problem. So we're in a cycle now, and it has a big bearing whether I have a land or we have a land problem. A lot of it starts with what's my land worth? And
Yes.
everybody carries a different calculator. You know, it could be individual perception of their value has a lot to do with how they think. Is it price per acre, price per door, price for gross fair area, price for net rentable area, what's the zoning? But everybody who owns a piece of land that I've ever met has their opinion of value. But in its purest form, land is worth what you can do with it, when you can do it, and what money you're going to make from doing it. So that it's you know, that's why we do so much, Derek, with internal rates of return, because if you're dealing with a piece of dirt, you got to really do what we call the unbuilt building and see what the zoning allows and what you can build, and really discount it back till today. So net present value. So I think our problems in the land that is not moving very much now is just as much in the ownership as it is in the values or the perception of values. What benefits are being offered? You can't put a piece of land on the sale and list it and then sit back and wait for the phone to ring. You got to be proactive in what you're going to do to add value to somebody else buying it.
Okay, good. Harvey, welcome to the webinar. Harvey's in Calgary. Yep, long time friend of mine. Harvey, because you've been in Alberta, you've been through more booms and busts than most people, just given the resource-based economy of Alberta, right? And Toronto has had a decade or decades-long boom, but now it's seeing a significant downturn. As a guy that's lived through booms and busts, tell us what we can expect.
So firstly, Derek, a statistic I've been following for a long time is I've followed the housing starts per capita for all the major Canadian cities. Calgary and Toronto, or Calgary and Vancouver, are basically equal. They're on the top of that chart. Toronto, despite what you think we've had this up and downs, we're 35% 50% more housing starts built in the last 25 years than Toronto. We're 50%.
No, Harvey, hold on. I get that. Okay, we've talked about it. Based on the booms and, listen to the question, based on the booms and busts you've been through, right? What can Toronto expect? Because we are going through a downturn right now. We haven't been through one in a long time. You've been through a bunch of them in your career. What can we expect in Toronto is the question.
Well, we go through booms and busts, but our highs and our lows aren't as significant as what Toronto's going through right now.
Very good point. Gerald, you see
You
that?
know, and
I like that.
you know, I can think about I've been around for 4 cycles over the last 35 years, and so like in 2008, we had a bit of a cycle, but it only lasted kind of 2 years, and then we were back going again. And then our last cycle, we had a softer period of time. However, we didn't have any foreclosures here, and there was still a whole bunch of stuff like rental apartments went right through that cycle and did okay. And so, I was just in Toronto.
No, Harvey, I got to ask you the question again, because you've got some specific knowledge I want to get out of you. Okay.
Yeah.
Toronto has not had a bust in a long time. Okay. How does this thing play out based on your experience in Calgary? So the first thing you said is our peak to trough is probably larger because we've had more of a bubble inland, right? How does this thing unfold, baby? That's what I'm asking.
I think the challenge for Toronto is that obviously it's very expensive, and so rents are very high, condo values, housing prices is very high. So I think, in light of that, I don't think you could compare to Calgary. And, part of the reason is that Calgary has had some ups and downs, but in a lot of ways it's been pretty steady, but, we're affordable. And that's
Right.
why.
Daryl, and Ashley, I'm going to ask you this question. We have not had a bust in Toronto for a long time, which means that, the bigger the bubble, kind of, the bigger it's going to burst. How do you think a land bust unfolds? Ashley, what do you think? How does it unfold? We haven't been through this in a long time.
To me, a bust unfolds when sellers have to sell, right?
Yes.
A lot of people right now are saying, if you don't have to sell, don't. You don't have the favorable market conditions. So when lenders come to you and ask you for capital calls because your loan to value is out of whack, whether it's land or a building, and folks don't have or want to put in that additional equity. I was just at a different conference a couple of weeks ago, and I'm hearing some in office market, the limited partners aren't making their capital calls. So that creates the pressure on the sellers, and the buyers are vultures, right? They when they smell blood in the water, and it starts that road down. And when there is a massive supply of that kind of situation is when a bubble bursts, in my opinion.
Okay, Daryl, you've seen some bubbles and so on. How does this thing unfold?
I think
Let's say Toronto land.
I think it starts way before we know it. It starts when lenders are still lending like drunken sailors. We'll take any money we can get because it's never going to stop. I better buy it today or it's going to be worth tomorrow. I'm going to build this multifamily project because Joe next door built it and he looked like he did good, so I can get money. And so it starts way earlier than when we wake up. And when we look at the cycle, it's when things are humming and going, and we can't underwrite it from an economic perspective why it's doing it. And you just test yourself when it's going crazy and say, why is this doing this? And the answer is, we don't know, but we're on the train. And that's when you need to know that things are starting to stutter. They're stuttering then, but we don't know it. And then when it comes, it's denial for a long time. And It doesn't matter what market it is, where Harvey is or Ashley or Ontario. It's the same formula that happens. It's denial that something is really happening, and then anger, and then after two more things, it's surrender. Okay, I always figured it out. It's not working right. A lot
But
of people
Derek,
with land, if we're talking land, some of them are still not there yet, but they're going to be. They're going to be.
Derek,
They're gonna
there's
be-
something
Harvey?
that's played out in Calgary that for sure is going to play out in Toronto. And
Yes, what's
so
that?
I can think back over the last 6, 7 years, all the markets perform differently. So single family, multifamily, rental, high rise, mid rise. And so the same thing is going to play out in Toronto, where there's probably a third of it that'll kind of.
Okay, next slide. Hold on, Harvey. Harvey, this is coming to your next slide, which I think illustrates your point nicely. Rod? Yep, no, next slide, show the graph. Harvey, I think this will help you explain your point.
Yeah, so this is that 5-year, this is from 2017 to date, and it shows the different land value fluctuations. And you can see that the first column there, single family land is basically doubled in Calgary in the last 2 years. And then inner city multi-land infill sites has gone up quite considerably. Infill sites our suburban sites have gone up quite considerably. And one of the dynamics is that actually rental growth in the suburbs has been at a greater percent than in the inner
Sure.
city and downtown
Right.
high. And then if you flipped over to multi-res inner city, land values have gone down in the last 3 or 4 years. And the dynamic there is that I've been a developer for 20 years, and I've been selling land for about 14 years, and I've sold 150 sites. Every site that I work on, I do a cost valuation approach. And so 4 years, just to give an example, I had a site in inner city. I did a cost valuation. I had it up for sale and I couldn't sell it. And then 4 years later, the owner calls me, invites me in. He goes, "The market's booming, Harvey. What's my site worth?" So I do another cost valuation. And so our construction costs are up a huge amount. Interest rates are up a huge amount. Rents are up a bit. And so when you add it all up, even though the whole housing market was really, really strong, his land was worth less than it was 4 years ago. So the lesson learned there is it's the cost valuation and what's going on with all those different dynamics that it affects what land's going to do. That same thing will play out in Toronto also.
Yes, and I think it's already playing out, and you might find a bigger delta between 2017 and 2024 because our bubble was much higher. Does that make sense?
Yeah.
Like, we don't know what that floor is on land, but land got up to like $200, $250 per square foot higher in prime areas, right? And so when it goes up that high, actually I'm talking per buildable foot now, right? Like those are big numbers, even in Canadian dollars. And that number is dropping. And so, Harvey, there's been so what you're saying is single family home has gone up, and at the exact same time, multifamily high density has gone down.
Yeah.
Interesting dynamic. Okay, next slide. Actually, let's talk. Canadians love Florida. Okay, half of us winter there. A lot of people invest there, things like that. Talk about the Florida market, and then I've got one graphic that you sent me that we're going to put up. Okay, tell me when you want that to put that up. Stop with the
Real
Florida
quick,
market.
and hop into Florida, I'll take about 10 or 15 seconds. And you said obviously this group is multifamily. I'm hearing, anything that's going to be distressed multifamily is likely to be done through note sales. So I'm not sure what the profile of folks that like note sales, but a lot of these projects are still performing. They're just not performing at a rent number that's achieving a low cap rate. So, I think the bubble, on sticks and bricks, I'm the land guy, so sticks and bricks is going to be sort of a reset of what real rent and real cap rates look like. So I just wanted to throw that in there. But
Sure.
on to Florida, again, you may have heard this metric before. There's about 1,000 people a day. That's net of leaving and passing away, moving into the state of Florida. So that's about 1 million people every 3 years. The supply of housing is not keeping up with that number. And part of it was the permitting that you spoke about earlier, Derek, and some of it is just the ability to, buy land, get it entitled, service the lot for construction and build. So we continue to have a shortage of housing units here in the state of Florida. Again, as I mentioned briefly before, multifamily market rate, the typical 300 unit garden style apartments, that has slowed down significantly. But the phenomenon of build for rent has really filled in the gaps of development. Most of the national home builders, D.R. Horton, Lennar, Pulte, etc., they've all got into townhouses for rent, which is interesting because before, when you would do a townhouse for sale, a developer is going to want to take down schedule. They're going to want to make sure they have the sales. Where these large national home builders are doing townhouses for rent, we're in the final stages of putting a deal together with D.R. Horton for 204 townhouses that they want delivered all at once because they're going to build them and rent them. So it's built and absorbed like rental. So single family for rent, multifamily townhouse for rent has really made a big difference in filling the gap where the market rate has slowed down. So again, it's still very, very aggressive right now in the market. And, our transactions are actually up, each of the last several years, year over year, because we continue to be able to fill those gaps with the different asset classes.
Okay, so let's go to the next slide, because you asked me to put this up in terms of just sort of giving some explain the slide here, why you asked us to put it up.
So it's interesting if this came out of, I gave this presentation at our national convention. This came out of emerging trends that PricewaterhouseCoopers and ULI put together. So they do a very significant survey, and the demand is still there, despite, as I mentioned before, the three-headed monster. Interest rates, construction and labor costs, and insurance. In Florida, commercial insurance is up almost 200 to 300% over 2022 when we had a massive hurricane roll through. So despite all of these headwinds and all these factors, the land continues to get absorbed, and it is a very optimistic approach. If you talk to any of the national developers, with the idea that if they need to switch back and forth between for sale and build for rent, it has created even more optimism because of the housing shortage that I just mentioned.
Does build for rent work everywhere?
No.
Like, is it going to work in New Jersey? Is it going to work in California? Or it doesn't seem like it's a national story, build for rent. What do you need to happen to build for rent? Like, what is the driver of it? Population, of course.
Yeah, the driver is multifamily rates, rental rates, right? Most of those developers are underwriting their townhouses for rent to be equivalent to what a market rate apartment will rent for in that market. They will get more, they'll get a premium, but if you don't have a rental rate, your market rate in your community, then the math won't work on the development. So a developer is not going to develop that build for rent if they can't get the rent to meet their return.
Sure. So it's driven by rental rates, which is driven by population growth and job growth, and then land prices and the permitting process and the ease of doing it, I suppose. Okay, good. All right. Okay, Rod, let's go full screen with everyone. We're just going to get to some questions now. Daryl, just a philosophical question. No, yeah, full screen. How do you value land today? We got lots of land coming up for sale. How do you value it? Where do you start?
Well, first of all, as I said before, everybody has their own calculator. You can bet that historical purchase prices of land is what the owner will say it's worth, at least, if not a lot more. Depending on
Yes.
where we are in North America, we have a stable economy or we have a declining. Valuing is based on zoning, price per acre, price per square foot, price per unit, price per gross area, price per net rentable. And as I said before, it's land is worth what you can do with it, when you can do it, and how much money you're going to make doing it. And that's all part of the in-depth calculation when you want to go deeper than what we just talked about before. Harvey uses, and he backs up very well, price per acre in a lot of his multifamily. And where we live, or where we are, you may have the same zoning and the same, but you may have some real problems with negotiating with NIMBYs, getting the right parking ratio, so it may drive down the ability to build what you thought you could build in zoning, and that's a real negotiation. So for me, it's what you can build, when you can build it, and knowing that you probably don't have the value until you've done that research.
Mhm. Let me ask all three of you a theoretical question. I've got a site for sale. It's two sites for sale side by side. Site A is 400 units. Okay. Right beside it is site B for 4,000 units. Fair enough. What's the difference in the price metric per unit? Harvey, let's start with you.
Significant.
Petri dish. Why?
I just had a site in Calgary, a high-rise site right downtown, 1.5 million square feet of density.
Big. Yeah.
And for Calgary, that's nobody wants 1.5 million square feet of density. So the price of that site as compared to a 300,000 square foot site would be 50%. And
Yeah.
the same thing is going to play out in Toronto, that, what was very saleable yesterday is there's not going to be any demand, and the price discount's going to be considerable.
Interesting. Ashley, what's your thought? 400 units on site A, 4,000 units on site B, identical sites. Let's call it mid-rise product, just to keep it all simple.
I mean, the 4,000 is going to sell at a significant discount. I mean, the simple math of it is you're not going to absorb those units all at once. I can't imagine a developer would build that many at once. So you're going to have to provide a return on that land while you hold it until it absorbs. And if you look at what investors and developers want to make a return on their land, and you apply that discount for the time value of money, it's going to drop it significantly.
So supporting what both Harley and Ashley say, the 4,000 units, you look at a master plan and slice and dice and sell one at a time and keep your price per unit up. You can't just build 4,000 units like Ashley says. It's a scaled project anyway. So why not?
It's a
not
scale project.
Started at the land, not started as one potential project that's scaled over time. Cut up and slice and dice and get it a master plan so you can have options to do, because you can keep your price up that way. But it's like Ashley and Harvey said, you're not going to do it by looking at that high level without going deeper.
Right. But if you're a seller of that land, just like an apartment building today, bigger is not necessarily better. So if I've got a 200 unit building to sell, I can sell it. But if it's a 2,000 unit portfolio, there's way less buyers because or 2,000 units on one site, let's say, if that, that doesn't exist too often here, but it's generally the same thing true for land is what you're saying, right? Okay, good. All right. So how do you determine the price of land today? Like, so some places you've got a falling market. Harvey and Calgary, you got a falling market on mid-rise, and you got a rising market on multifamily. How does a broker go about pricing it? Or is that the broker's job to price it? Daryl, what do you think? We talk about this often. What's the broker's job here?
We talked about it a few minutes ago. I mean, it's who holds the calculator. I think the more important question is, if you're either your land or a client's land, the first question is, how much debt do I have on this? Don't
Yes.
forget, it's an alligator every month in one or two different ways. Paying realty taxes only, maybe cutting the grass, or do I have a mortgage payment? And it has a lot to do about how you think about value. In other words, where I'm going to in the creative world is finding where the true equity is, or how you create the true equity. The first question is, do I have to ask myself as an owner, what's my debt, what's my situation? Because it'll have a whole different bearing on how I look at exiting or keeping or whatever I'm going to do.
Okay, Ashley, any comment? And just in valuing land when the market is in flux.
I think the other thing to be really mindful of when you're buying land is the terms of which you're looking to buy. Most developers, especially the larger ones, will pay a much higher price for the time to de-risk a deal, and that could be permitting, site plan, etc. And what we're seeing here in Florida is actually our buyers are liking projects that have a little bit of hair on them because they know the seller is going to need to give them the time to work through that. And most of our buyers feel that the interest rate environment, inflation, 18, 24 months from now would be not a bad time to start. So terms are also really important when you're looking at valuating land.
So Derek, it's not always the number, it's about creating a relationship. What can I do to help you solve your situation? What Ashley-
Right. So sitting and talking with the landowner and finding out what their situation is behind the curtain to understand how to structure the deal is critical always, but probably more important now because the land value is probably less than they think, right? Or than they initially had. And how do you extract the most amount of value from that land is in the terms and the structuring and the time that you give the developer, right?
And,
Derek,
and also what they will do. What will the
Yes.
seller do? Will he take
Yes.
on a joint venture partner, passive or active?
Mhm.
Will he exchange into a better benefit to get an upside that he doesn't see now? Is it better to buy a partner out and keep going? There are so many, the questions. I believe Ashley and Harvey may disagree, but I believe strongly that us underwriting a piece of land doesn't take very long. It could take half an hour to an hour. It's probably up to 3 years to understand our client and counsel with them to get where we can really help them a lot of times.
Yeah. So the real estate's the easy part. The relationship is where you got to spend your time.
Absolutely.
Yeah.
Absolutely.
Yeah.
Derek,
Derek,
Harvey,
I
you
got
got
a-
thing.
Harvey, go ahead. Harvey, go ahead, baby.
every landowner I meet him, I ask a simple question. Do you want a fast nickel or a slow dime? And so the slow dime is what Ashley's talking about, terms. And so if he's willing to take a slow dime, or he's willing to give terms, he's going to get a dime instead of a nickel. So that's a really good analogy for every landowner to contemplate. And you know, what does he want? And it's that really factors into the value of land.
Great point.
I'm
Ashley,
going to
you wanna-
use that, Harvey. I'm going to use that going forward. So.
Okay, good. Ashley, you got a point on this
One other
valuation
thing we're
thing?
seeing- Yeah, one other thing we're seeing a lot of in the market is
Oh, the hurricane may show up.
No, it's the hurricane coming through. Let's just give them a few seconds. Okay, so I think what I'm taking away from Daryl and Harvey here is this honest conversation with the landowner. Fair enough, right? What do you want? What are the pressures? Daryl, the one thing you've also taught me is always pull the mortgage on the property before you go see the owner. Explain what that means.
First thing, you can't really honestly give counsel until you know what the situation is. They have a $2 million piece of land. I either own it free and clear or I got 1.95 million mortgage against it. How do we
Right.
start the conversation? you really don't own this anymore, or you have $2 million of free and clear equity to spend one way or the other. And that's when you start working on the motivation level. And we have our scale of motivation levels, which can really bring out the truth of what people are trying to accomplish, you know, so.
So if you meet a land seller today who says, listen, I want price from 2 years ago, and if I don't get that, I'm not selling. Is that a listing you'd want to take, Harvey?
Run that by me again?
So, you know, you got a piece of dirt and the developer says, I want the same price as in January of 2022, assuming everything was good in January of 2022. What do you tell that guy? Do you take that listing? Do you take it out to the marketplace? It's overpriced, Harvey. It's overpriced.
Yeah, that developers are sharp, smart people. You know, they know what land is worth. I'd say to that guy, if you want to offer significant terms, then maybe we can get your price. But
Good. Yes.
I wouldn't, even in Calgary where it's very active, I've attempted to you know, get somebody a really high price, and more often than not, the market is pretty sharp. They understand it, and it's pretty distinct what values are in our market, and I'm sure it's the same in Toronto.
Okay, no, good. Okay, let's switch the discussion now to lenders. Okay, and actually, I hope you hear this question. Certainly, some lenders are taking it on the chin on loans that they've done on land. If you have to give one piece of advice to a lender, what would it be? Daryl, why don't you go first?
Well, first of all, I got to know what kind of a lender I am. Am I an institutional lender? Am I a private lender? Am I a loan-to-own lender?
A hard money lender, a guy that's lent the guy the money at
Sure.
13% or something like that, and now it's worth less than the mortgage.
Well,
What advice do you give that lender?
but it may be a lender that is flexible. If you can show me some reason to stay and help you, maybe I will put some more money into this if you're going to go up, and I can remain a partner or a participating, or now I'm a participating. It's all about creating the formulas, and you can't do that until you deal with the motivation of and what people are trying to accomplish. But if you're a lender that has, you know, I'm dealing with a situation out of Chicago, which is an example right now. It's been offered at 3.1 million, this see-through shopping center. It's not an apartment, but here's the thing. They owe $4 million. That means these sellers out in New York have to write a check at closing. So, so my advice is to go and talk to the Illinois lender who's private and say, what are you looking to accomplish? Maybe you can see the upside here. Would you come with us? You know, that sort of thing. It's really what the lender's all about. We all know the institutional lenders. We have a little trouble trying to get creative with them, but there are a lot of creative hard money lenders out there, and really it's important to know what their goals are and how creative they can be to get their money back and even make some more money by dealing with the right people to get something done.
Right. No. So meaning lender, go talk to the borrower, and borrower, go talk to the lender, right? And get to know where we are and so on. So actually, the question was, what's the one piece of advice you would give to a land lender who might be upside down or heading that way? Harvey, you're next.
The one piece of advice to a lender that's just to clarify the question, they're already the lender, correct?
Yes.
Correct.
All right. Well, I think the one piece of advice I would be is to, first understand the asset. If it's in an entitlement process, because usually the land lenders are pre-development, understand what you can do to push that value forward. Entitled land is worth a lot more than unentitled land, and understand your market. Again, as I mentioned, we're seeing multifamily market rate deals that are being converted into townhouse for sale for rent. So is there another path of entitlement or planning that you can do to create value. So again, see where you're at in that entitlement process and understand your market.
Right, okay, good, good. Just want to repeat, Daryl's sort of conclusion was, you've got to see if the lender will come on board and maybe even take a participating profit. So now the lender becomes your partner. There's a safety first. He gets his money back first. He gets, and stuff like that. Harvey, what's your advice to lenders?
Vast majority of lenders rely on appraisers.
Yes.
And I can tell you that, especially in a falling market.
Yes.
So over the last 5 years, I've seen some terrible, terrible appraisals. And so the bottom line is there's better market intel out there. And so you seek out the absolute best, put a lot of time and effort into it, and get on a plane and go to where you can find the best intel, and the time and effort you put into that is going to pay off really well.
So land valuation is difficult at any time, probably more difficult, much more difficult in a falling or rising market, whatever, right? We're talking more
Yes.
about falling market. Yeah.
Yes.
Okay. All right. Okay, good. Okay. Last question. Okay. We've all been in really good times for the last decade or so, and we're used to deals that are basically cash the mortgage or all cash deals, right? Give me some creative formulas now to get, Daryl, I'm going to start with you. Okay. So we've all been trained as brokers, as financiers, and so on, that we're doing all cash deals. All of a sudden, you can't do an all cash deal. Give me a couple of options as to how you could structure a deal, Daryl.
Well, there's a number of them. I'll just start with, whether buying or exchanging or selling, I always seek benefits for both sides. That
Yes.
if you need to buy or sell, really don't be dealing remotely, third party, get in front of them, get to create relationships with the provision, though, I know what I want and what can I do to help you get what you want. And
Yes.
market may say, depending on where you are in your cycle, market may say, don't build now. So do you decide to hold on? Well, we can hold on. We'll just hold on. There's so many others. Lease option. I'm a buyer and I want to come in and, I'll put all of the approvals together, like Ashley is saying, and then I get an option to buy it. If I do it, I'm doing all that work for you. And if I don't buy it, I'll give you all the approvals. Use the land if you're a seller, use the land as a down payment to go up. Maybe you maybe have a $2 million down payment. You have $500,000 piece of land and $1.3 million in cash, and you put that in, depending on who's the other side. And
So you're just saying you bend your land into a deal.
Don't forget, your land is worth something. This idea that it can only be cash, that's just not true. Equities are equities. And if we understand how most of the deals are done in the stock market, it's trading equities. It's not, cash doesn't show up very often. We got to understand that in real estate. If we want to go down and out, what do we do to do that? Well, we'll maybe take back financing. We'll take back maybe something else to get us out. We don't want this. We're don't wanters. If we want a JV, we JV as an active partner or we JV as a passive partner. If we want to get rid of a partnership, you use the same formulas as moving them out. If you have a free and clear piece of land and you say, I got a partnership problem, you've already solved the problem by using that free and clear land to get rid of them, either by getting a mortgage or taking back a mortgage, and it can take just the lawyers getting together and closing the deal. I mean, there's a lot of simple things you can do. But first of all, you got to know where you are, and not necessarily where the value is in the marketplace, but where you are personally or corporately in the cycle that you're in, and what you can do to help somebody else to allow you to get out of what you want.
Good, great advice. Harvey, what would you say? Like, we're used to doing all cash deals, all of a sudden you can't do that anymore. What's a mindset that buyer and seller need to have?
You need to do your due diligence. significant due diligence to understand the fundamentals of the market. So, you know, go here, hire Derek Lobo and pay him to teach you the fundamentals of the market. Because, you know, this isn't brain surgery, this business we're in. And if you get the right people and the right data and the right intel, you know, it all adds up at the end of the day. But do really, really strong due diligence, and that'll help you gain confidence in being able to do a terms deal of some sort. That confidence thing is a big, big thing. People
Yeah.
won't, if they don't have confidence, they won't make decisions. If they have confidence by educating themselves, then they're in a stronger position to make a decision.
You know, Harvey, you said something really interesting. So I'm a guy who owns a piece of land and a guy brings me an offer. I want to make sure the guy bringing me the offer understands the market, because if I'm going to give him 90 days, 120 days for due diligence, okay, it could just be someone completely wasting my time, right? Daryl, one of the things, one thing Daryl taught me was when you get an offer from a buyer, put in a clause that the seller gets 4 weeks to approve the buyer. Right?
Yep.
Yep. Good. Okay. Ashley, my friend, last word to you on this topic, creative deal structuring.
You know, again, seller financing is always, you know, a creative structure in deals where you can't afford to do it and the liquidity is not there. But again, setting up those structures where, you know, sellers, most of them don't want to go vertical. Many landholders, you know, a lot of times it's inherited or family properties. But they want to achieve value. I think setting up a structure where the seller financing can be in place, and you know, possibly doing a back end piece, joint venture piece, you know, where they get a chunk of it out with the construction financing. You sure don't want to put all your equity behind a construction loan, or at least most of landowners don't. But a lot of times, especially where they've owned the property for a long time and there is a lot of equity, they're happy to take a certain amount off the table and let a certain amount ride. So I think that would be the most creative structure in this type of environment.
Right. Great. Okay. Really,
Derek?
really interesting. Yep. Daryl?
Derek, just
Yes,
one
sir.
comment at the end. You and I both know a developer that started building multifamily buildings in the 60s, and he's
Yes.
been very successful. So I asked him a
Mhm.
couple of years ago, you know, you're getting up there now, you don't want to build anymore because you're not, it's not healthy for you to do it. So what are you doing now? And he said, I'm buying land. And I said, why are you doing that? He said, there's no better investment. I wrote it down. There's no better investment. There's no better time. And under all is the land. So what he was doing was buying it for his estate. But he saw what a lot of us are thinking, you know, it's not all about how can I monetize this thing to tomorrow or the next day, or how do I get out? What do they really want to do? Is it for estate planning? Don't be scared to have a piece of land for estate planning. That's what he taught me. I was shocked when he told me, but he said, I'm true. That's exactly why I'm looking to buy land, you know, so there you go.
Great piece to end on. Ashley, Harvey, Daryl, thanks very much for coming here and sharing your wisdom with us. We very much appreciate it, and thanks everybody for joining us. Okay, cheerio. Bye-bye.
Thank you.